Hi, hello, namaskaram. Let's talk about mastering the downside gap, 3 methods candlestick pattern. So technically here what happens is first the big candle forms and the gap down happens, and then the market reverses. So we will talk further about this gap down 3 methods candlestick pattern, but before that read this disclaimer. And let's go to the Japanese candlestick. This is one also I discussed many times about the bullish and bearish stick candles. Let's go here. This is what it is. So first time initially the operators or the market movers made the stocks to come down, and then they have created a fear. Oh, it will fall further. Maybe the shorts would have people would have created a short-term shorts here, and they squeezed all the people who think or they have taken the short positions. Majority of the people do not keep this this as a stop loss. Sometime here itself they will fear, because this has closed the gap on top. It has the stock or underlying asset has rallied from the lows and went up to almost like 1 2 3 4 4 5 times more from the bottom. So from the units point of view, so they will definitely exit somewhere here. So it is better not to take this kind of positions. I will tell you when to take the position. I will show you a live chart. But before that, this is not on a very high reliability. If it happens on the very uptrend, that's a different story. But if it happens on the normal cases, it's not so on a highly reliable thing. So understanding the pattern is important. Signaling, this is basically signaling a bearish reversal, and technical analysis application. If you see in this example clearly, there is a gap down has happened here. This is the area, and then the market starting it. None of the time the stock has closed above this one highs, or this one high also. So I think solid it will give a 10% return. It's already given 7-8%. It would have given this solid Nifty India Digital, I think so, but it would have given that thing. So important thing when you are taking entries, your stop losses, your entries are very, very important. People might say this is timing, all those things, but that's how you can make money using the Japanese candlesticks and the indicators. Understanding anatomy, we already discussed about the anatomy. Identifying 3 candles: opening candle, gap up candle, and closing candle. Opening candle is always like bearish candle, gap down candle is bearish, and closing candle is in green. Significance of downside gap, I think I already said about how the real-time markets people work. You can read it. You can pause and read this one. And bullish engulfing, you might feel that it is like bullish engulfing has happened and market might change. That's why people get really feared. But before you fear, make sure you understand. If someone who has seen this, they will not get fear, I'm sure about it, because they understood, they learned this concept of how you can read the charts. Interpreting the underlying market sentiment, analyze the price action, observe volume trend, assess the investor sentiments. So, and entry and exit strategies when trading the downside gap 3 methods is something. Identify the reversal, time your entry whenever you enter. Make sure the earlier candles high should be your stop loss. Set stop loss. Manage the trade and determine the exit. I always say enough is a good word when you are in profits. So take it. Do not do not lose your money when you are trading. Compare the downside gap 3 methods to other reversal patterns. Hammer or hanging man. If you see those kind of things, that's also nice in sense. If the next candlesticks forming after this is like a hanging man or hammer, it's nice that the negative trend is continuing, or bearish trend is continuing. I shouldn't say negative, it's a bearish trend is continuing. Integrating the downside gap 3 methods, you have to integrate it. I always say, if you have to integrate something into your life, you have to journal it and you have to work it, and then you can combine with other things and you have to progress using that. Your practice is progress, so practice using the backtest. Common mistakes. over trading a pattern, neglecting risk management, letting emotions influence decisions. So never let your emotions influence your decisions. Do not neglect risk. Risk is the important thing than the return in the stock market. So after losing money only you will understand. So do not lose money like me. So I would have paid $100,000 to many people. So I have designed some courses. They are not like $100,000. So you can join those courses out here. I also help in consulting, portfolio reviews. I have written multiple books. You can purchase them, subscriptions and whatnot. You can join the Telegram channel, and social media links are given here. I think that's all. I think real world scenarios, as I said, you practice and analyze, you practice and see this. Top stock research is one place you can go and find it out. I have given the link, affiliate link, you can use that. Thank you. Thanks for your time, for going through the powerful bearish downside gap 3 methods candlestick pattern. Have a good time.